Good morning, trading world. It is January 18th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook is On the Edge of Risk versus Reward. As we move out of the major financial earnings, let us take the 30,000 foot view to see where we are. Coming out to a 5-year daily aggregation chart, we can clearly see the down channel and see that we are on the edge of that channel, or the upper edge. This upper channel line is where we should reverse to go lower to collect our reward versus a breakout taking further risk. And I guess let me kind of highlight this. Going back through it, this is the upper channel line here, and this acts kind of as our rolling resistance, that trend down channel that we're currently in. And as you can see, this is the top part of the channel, and this is the bottom part of the channel here. And what happens is that when we reach this channel, this should be where we reverse and go back down to test the bottom part of the channel. And at this point, this is where reward meets risk, because your reward again would be to do this again, reverse and go back down, but your risk could be to continue through that trend line, breaking up. Also on this chart are horizontal lines known as major support and resistance channels. I make it a point to point these out every outlook. The current channel we're in is 397, and the top part of that channel is all the way up at 416. The mapping of these major support resistance channels helps me identify risk. If this downward channel breaks, as we have on the white line or the white arrow here, if it breaks, I have an idea of how far price action could travel before the next possible consolidation. This gives us a great way to visualize risk versus reward. So often traders take trades and do not plan the exit for if things go wrong. And my approach is I start the process thinking about the exit or stop loss if things do go against me first before anything else. And if the risk is too great, I do not take the trade. So here is perfect example of that visually. When you're looking at taking the trade versus this being your risk, and this being the reward. So that's pretty much how I look at trade pretty much some form of this takes place on every type of trade that I do. I am a big futures trader. You don't have time to do this at every moment because futures are fast, but this principle is pretty much involved in every trading process that I do to some form or to some degree. With that being said, for today, I'm going to repeat some things because even if we break above this 397,400, I do not see trade persisting for long periods above those levels. The break above is very possible, but in February, we will start to see the weaker undercurrents start to take hold of the markets. So for me, I'm starting every time we peak above this area, I'm starting to put on some bearish, longer dated put spreads. Going out to as far as mid to late February. So those are things that I'm doing right now. Let's bring up the key levels to watch for today. All right, here we are back with the key levels of the day. Nothing has changed from yesterday. Starting on the resistance side, we have our jack resistance at 398 to the 399 area. Queen resistance at 400 to the 401 area. I'm thinking we would pretty much get a test up to this area at some point and maybe fail. And then our king resistance 402 to the 405 area, which I'm warming up to think we will test at some point later in the week, possibly on a Friday expiration. On the support side, we have our jack support at 397 to the 396 area. Queen support at 395 to the 394 area, which is going to be really important. And then king support 393 to the 390 area. The main thesis for today is small but bearish. Closing below the 397.77 with a projected target low of between 397 and 392. The alternate thesis is bullish, closing above the 397.77 with a projected target high of between 398 and 405. The main channel we are in is from 397 up to 416. The main channel below is 397 down to 379. Market strength embedded was relatively range bound with a bearish tilt. We have a slight distance between the technical side, which we started the morning off at a 50-50 level, but as of now, it is more bearish, meaning we would try to reverse and go back toward that technical range. And the quant side, which is also bearish. This brings us into the key scenarios for today. Give me just a moment to bring those up. All right, and again today, our first and most probable scenario is going to be our expanded range day structure. We could have an initial push up to a major resistance level, consolidate around it before powering back down for a while. We're going to work our way down and maybe kind of end our day maybe really close back to where we started at, or very close to it. So this is our expanded range day down. All right, our second scenario is going to be our rounded reversal day type structure. We could get a continued push, should be higher, toward the jack or queen support area and find midday chop around either the queen or king. Let me correct this because this is... All right, here we go. This is better. Rounded reversal day type structure, we could get the continued push higher toward the jack or queen resistance area, find midday chop around either the queen or king resistance before going back down with the same energy or force we went up with the first part of the day. There also is a vice versa scenario with this, and the vice versa scenario could look like this. If we get a nice interesting pop up to already eclipse those queen or king resistance area, we could start off with a continued push lower. And actually, let me do it this way because we would be up for a while and then we would get that takeoff to the downside. And find our midday chop, which would be somewhere between the jack or queen support area, and then kind of push our way back up the second part of the day. I don't believe we would have as much force coming back up as we did coming down, but this would be our rounded reversal day type structure. All right, our last scenario is going to be our trend day up. We open with a gap up, start with a push back down toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible queen or king resistance area. Not all the time, but a good amount of times we usually come out the second half of the day looking to continue the primary trend of the morning, which would be up trend in this uptrend day type structure. But it usually turns into a head fake, and at some point we'll get kind of a retrace or fade back into or toward the close. That is our trend day up day structure. I usually don't do this often, but we're in such kind of middle ground that it is even still possible to have a vice versa alert on the trend day up, which would be the completely opposite, meaning a trend day down. And in that trend day down scenario, we would get something like this. We would get a good long drop down, giving us that open gap down. And if we got a decent sized gap down, we would have a push back toward the previous close, where we would find resistance on or before that previous close, and then start the downtrend for the day. And from there, we find our midday chop, which would be somewhere around either the queen or king support area. And then we would get that same head fake looking to continue the primary trend, but we would get what would be maybe a small rally or push up going into the close of today. So those are the scenarios that I will be planning for. I hope this helps. This is kind of a dangerous area because of where we are strength-wise, momentum-wise, because we are in that area where, again, larger time frames are fighting for control. So these momentum swings can be huge. And this is kind of what happens when we're looking for that shift of momentum to figure out the next primary trend. And we get these swings, these wild swings, and it's kind of like a megaphone effect where we're not getting quite, well, it's possible for us to make higher highs and lower lows because we're trying to figure out the next actual trend. So this is a point to be very, very careful. And as I always say, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position, and we manage that risk in accordance to our account size. I hope this helps. Wishing for you a positive trading day. Let's go out and make it a great one.